You know that feeling when you're staring at your screen after a massive loss, wondering why you completely abandon your strategy? Yeah, we've all been there. Most traders think emotions are only a problem when they totally lose control. But today, we're diving into how to stop those emotions from quietly destroying your trading account long before that happens. We're going to look at the exact frameworks the pros use to turn their messy psychology into hard, unbreakable rules.
We tend to think emotions only matter when we go on absolute tilt and blow up an account in a single afternoon. But actually, the mental leaks, they happen way before the ultimate account blow up. They start as these tiny, almost invisible shifts in your mood, literally before you've even clicked the buy button.
Think about how this actually plays out in your day-to-day trading. Fear makes you pull your stop early because, well, you just can't handle a tiny pullback. Or greed pushes you to wildly oversize a position. Then there's frustration, taking a $750 loss and immediately jumping into a hasty revenge trade. And hesitation. You're staring at an absolute A+ setup, but because you got burned earlier, you freeze, miss the move, and then, you end up chasing it at the absolute worst possible price. Your psychology is dictating your executions.
So how do we fix this? We've got to totally pivot your mindset. The old way of journaling is just logging the numbers, your entries, exits, and your final P&L. It treats the journal like tedious record keeping. The new, profitable way, that's actively tracking your emotional state to catch those toxic patterns early. Your journal isn't just homework you do after the closing bell, it's an essential part of your actual trading edge.
To get this right, let's break down a highly actionable 5-step framework. This is how you turn those fleeting, messy feelings into hard, measurable data. By the end of this, you'll know exactly which emotion is draining your account the most. Let's get into it.
Step 1. What's your pre-trade emotion? Before you even think about clicking buy or sell, you need to jot down your mental state. Are you calm, confident? Maybe you're feeling rushed or even a bit desperate. Look, if you step up to the charts feeling terrible, maybe you only got 3 hours of sleep or you're super stressed from work, that is absolutely going to amplify your mistakes. We're wired to hate being wrong, right? So if you start a session feeling desperate to prove yourself, you're going to force trades that just aren't there.
All right, step 2 focuses right on the heat of the moment. A lot of critical mistakes happen while the position is actually open. You enter with a solid plan, but the second the market ticks against you, boom, anxiety flares up. You panic. You manually move your stop loss because you're terrified of taking the hit. Or, on the flip side, you hold a winning trade way too long out of pure greed, and you just watch a guaranteed green trade flip entirely red.
Step 3 is honestly where the seed for your next massive mistake gets planted. After you close the trade, you must note how you reacted. Did taking a loss make you want to instantly win it back? Did missing a big move give you severe FOMO? Or, and I see this all the time, did a massive win instantly make you dangerously overconfident? Traders hit a big winner, their confidence goes through the roof, and on the very next trade, they completely oversize and give every single penny back to the market.
Now, how do you track all this without burning out? Step 4 is the secret sauce here. Look, instead of writing long, tedious diary entries about your feelings that nobody wants to read, and let's be real, you'll eventually skip doing anyway, use rapid-fire emotion tags. Just click fear, boredom, or revenge. Over time, this builds up a behavioral database. It makes your psychological patterns instantly recognizable when you review your data at the end of the month.
Which brings us to step 5, the weekly emotional review. At the end of the week, don't just look at your P&L. Sit down and ask yourself the hard questions. Which specific emotion caused the most rule breaks? Did your hesitant entries perform worse than your confident ones? Once you identify the culprit, you build one single protective rule for the upcoming week based on that answer. You isolate the problem and you cut it out.
This beautifully illustrates what we're actually up against. Common behavioral biases, like loss aversion, our natural preference to avoid losses rather than acquire gains, result in premature exits. And overtrading, that leads to massive transaction costs and drawdowns. These psychological biases have a huge impact on your bottom line. Keep in mind, you are literally trading against institutional desks, algorithms, and your own worst instincts. You absolutely need predefined discipline protocols to mitigate these biases.
But hey, here's the brutal reality of the situation. We all know we should track our psychology, right? But the data shows that manual journaling compliance drops below 40% after just the first month. Why? Well, when you take a painful $1,500 loss on a Wednesday afternoon, literally the last thing you want to do that evening is open a spreadsheet and type out an essay about your feelings. It sucks. So, you skip it. And then Thursday arrives and you repeat the exact same mistake.
Because manual journaling usually falls off a cliff,
Automating the heavy lifting is an absolute game changer. Using a tool like TradeZella completely eliminates the friction of tracking your psychology. It pulls in data from over 500 brokers automatically, giving you custom emotion tagging, AI-driven pattern recognition, and playbook structuring. It just removes the pain of data entry so you can focus 100% on analysis and execution.
And the crown jewel of this whole automation setup is Zella AI. Think of Zella AI not just as some basic chatbot, but as an autonomous trading partner. It actually reads your tags and instantly highlights behavioral cascades. For example, it might detect that after a loss bigger than $750, you take a revenge trade within 15 minutes 68% of the time, and those trades almost always lose money. It flags the pattern every single time it happens, so you don't have to go digging through rows of raw data.
You just can't ignore the qualitative data. Like the quote says, the notes are exactly where you catch the emotional patterns that the numbers just do not surface. A negative P&L number only tells you that you lost money, but tracking the psychology through tags and notes, that is exactly how you uncover the hidden reasons behind why you deviated from your trading playbooks in the first place.
Plus, for the visual learners out there, TradeZella includes this incredible tick-by-tick trade replay feature. A static chart makes every exit look super obvious in hindsight, right? But Trade Replay restores the actual uncertainty you felt mid-trade by playing the market back tick by tick. You can visually review exactly when panic took over your mouse hand. The chart looks a whole lot different when you're down $300 and sweating compared to hours later when the market is closed. Replaying it builds real, tangible discipline.
All of this psychological data feeds directly into your proprietary Zella score. That 74.98 isn't just a vanity metric. It gives you a single comprehensive grade at a glance. It combines dimensions like your execution consistency, drawdown control, and discipline. It essentially gamifies your improvement, giving you a clear benchmark that you can try to beat every single week.
Ultimately, if you want to survive and thrive in these markets, making your internal decision-making visible is the only way forward. You have got to turn your destructive emotional patterns into strict, unbreakable trading rules. Remember, your job as a trader isn't just to find winning setups. Your primary job every single day is to manage risk. And you cannot manage risk if you cannot manage yourself. So if you're tired of that constant, frustrating cycle of making profits and then emotionally giving them all back, it's time to get serious about your data. If you want to finally fix your consistency, you can lock in 20% off TradeZella today. Just use the promo code WOR20 at checkout through the link below. Start treating your psychology like the critical data metric it actually is. Ultimately, you have to ask yourself, are you managing your trades, or are your emotions managing you?